Friends, this presentation highlights a landmark judgment of the Hon'ble Bombay High Court, which hopefully should conclude the debate on the eligibility of tax rebate under Section 87 capital A of the Income Tax Act, available in the case of resident individuals. The controversy arose particularly with the change in the software utility that came to be effected in the filing of the ITR form 1, 2, 3, essentially 2 and 3, because 87 capital A rebate in respect of capital gains came to be suddenly denied with the change in the utility that was introduced by the Income Tax Department from 5th of July 2024 in respect of the income tax returns that came to be filed for assessment year 2024-25. We have 3 sections in regard to capital gains taxation at a specific tax rate. Section 111A talks about tax in respect of short-term capital gains derived from equity shares where STT has been paid. And we know that tax rate used to be 15%, which of course has since been revised to 20% with effect from 23rd of July 2024 in the budget and the proposals of the Finance Number 2 Act of 2024. Now this section 111A and another section 112, which refers to long-term capital gains in respect of any capital assets other than equity shares, the LTCG of which is taxed at a flat rate, or rather which was taxed at the flat rate then at 10%. Section 111A and 112, though providing for tax rates at a specific flat rate, never carried a restriction in regard to the eligibility of tax rebate under Section 87 capital A. The only restriction was that with reference to these incomes, a taxpayer would not be entitled to deductions under Chapter 6A. Section 112A, since it came to be introduced, had a specific embargo in relation to the eligibility of tax rebate under Section 87A. So if we keep aside 112A, under 111A and 112, that is short-term capital gains from equities, then taxed at a flat rate of 15%, and long-term capital gains in respect of other assets with indexation where tax is paid at a flat rate of 20%. Now, taxpayers, let me take a specific example how they came to be stunned by the googly, that came up on account of this interpretation that was taken in regard to the eligibility of tax rebate with reference to the provisions of Section 115 BAC, that is the new tax regime. In fact, in the earlier year, and even in respect of the tax returns which were filed up to 5th of July, taxpayers never found this difficulty. Of course, there is another twist to the story to which I will refer later. What happened was the interpretation that came to be adopted that for those taxpayers who opt for the new tax regime, they would not be entitled to the benefit of rebate under section 87 capital A, although there is no specific restriction either under 111A or 112, nor is there any embargo or restraint under the provisions of section 87A. On a clear interpretation of the provisions of 115 BAC, this view came to be taken that if you are opting for the new tax regime, you will not be entitled to the benefit of tax rebate in respect of capital gains taxable under these two sections. Let us take an example. A resident individual has income, total income less than rupees 7 lakhs. Take for example 4 lakhs is his normal income, interest or salary, etc. 2 lakhs is short-term capital gains for assessment year 2024-25, liable to be taxed at the flat rate of 15%. In this case, on the 4 lakhs, the 3 lakhs would be the basic exemption, and on the 1 lakh, at 5%, the tax would be 5,000. On the 2 lakhs of short-term capital gains at 15%, the tax would be 30,000. So 5 and 30, 35,000, and on this 35,000, because all the ingredients of section 87 capital A are duly fulfilled, taxpayers used to claim the maximum rebate of up to 25,000. So in this case, a taxpayer having income of 6 lakhs, 4 lakhs normal income, 2 lakhs short-term capital gains from equity under 111A, he would pay 10,000 rupees of net tax on self-assessment by claiming 25,000 as rebate, deducting the same out of the gross tax liability of 35,000. Everything was okay until 5th July. From and onwards, 5th July, the utility came to be changed and taxpayers were stunned that their tax returns did not accept their claim under section 87. There was a lot of hue and cry, representation by several bodies. It was expected that on 23rd of July, when the budget would come, there would be some clarification, or even if the interpretation of the CBDT, not a logical but a very clear interpretation, it would be backed by some formal legislative amendment. But nothing happened, and all tax returns of 2024-25 up to 5th July filed claiming rebate, after 5th July filed not being able to claim rebate at all. Lo and behold, even in respect of the tax returns filed prior to 5th July, where the utility had allowed the filing of these returns claiming the rebate, when intimations came to the taxpayers, they came rejecting the tax rebate claim if you are opting for 115 BAC, the new tax regime, and demands were raised along with interest, etc., and taxpayers were in a very clear situation either to go for an appeal or just pay up. This caused great unrest among a very large and vast section of taxpayers who were directly affected, small taxpayers, because their marginal income is less than rupees 7 lakhs. And just imagine their quandary, their pain, their agony. Finally, it was the Chamber of Tax Consultants of Bombay that filed a Public Interest Litigation (PIL) before the Hon'ble Bombay High Court. And the Bombay High Court has delivered a landmark interim judgment. Mark you, please keep in mind it's an interim judgment, but also the judgment has given a very clear interim relief and directions to the CBDT, which we will analyze in this presentation. What was sought to be argued before the court at the time of the admission was that the statutory provisions could not be overruled just by some procedural tampering. This was a very fundamental provision with which the court was seized and which, had to be taken a look into. And in fact, the court also said in the preamble of its interim judgment, quoting, that the issue which arises for consideration is in the present writ is as to whether the utility in the form of software can take away the statutory right to claim rebate as per the proviso to section 87A, and is it necessary for an assessee to make a claim for seeking rebate under section 87A, and should he be at the mercy of the ITR software utilities? So this aspect was highlighted before the court, and the court, while making its very important observations, stated that prima facie, we are of the view that the rebate under section 87A is inherently linked to the income, total income and tax liability of the taxpayer. And the court observed that the responsibility lies with the tax authorities to ensure proper implementation of the rebate as long as the taxpayer fulfills the statutory criteria. The court noted that procedural changes such as those in the utility software or instructions issued by the tax department cannot override the statutory right of the assessee. A very important observation, in fact, almost like a ratio decidendi, laying down the clear principle that any action or inaction on part of the tax authorities that limit the ability of taxpayers to avail of this statutory benefit, the court said, is arbitrary and violative of the rule of law. And taxpayers should not bear the consequences of administrative inefficiencies or unilateral executive actions that undermine the legislative intent behind section 87A. I think these observations of the court, at least clearly reflect that the court was prima facie impressed by the arguments that the department's action was certainly not fair and just. And therefore, in para 16 of its very illuminating judgment, interim judgment, the court has observed that it is well settled that statutory benefits must be extended in a manner that aligns with the objectives of the legislature. And in this regard, procedural changes that deprive taxpayers of such benefits warrant judicial intervention to rectify the anomaly and ensure justice. I think this is a great balm, soothing balm for taxpayers who often encounter such kind of issues. Because the Income Tax Act, the statutory provisions have no such restriction. But just because the ITR return software utilities have some kind of interpretations in the computation of tax, in the levy of surcharge, in the computation of interest, in such situations as allowability of the claim made under section 87A, taxpayers encounter great difficulties. And therefore, the court observed that tax authorities must act as facilitators to help taxpayers comply with the law rather than creating impediments through technical or procedural hurdles. And I think the golden statement made in this interim order says ensuring fairness, equity, and transparency in tax administration is crucial for upholding public confidence in the system. So, appreciating this clear aspect in the petition, the court, in fact, this judgment came on 20th December. 31st December, as we all are aware, is the deadline for filing your belated tax returns, or even if you wish to revise a tax return. So what the court has done in its interim order is directed the CBDT, the Central Board of Direct Taxes, to forthwith issue a requisite notification under section 119 of the Act. And what has been directed? Firstly, extend the due date for filing the income tax returns, that is e-filing the income tax returns, in relation to the taxpayers who are required to file a return of income by 1st December, at least to January 15, 2025. So the court has said that with a view to give comfort, this extension should be permitted up to 15th of January. But then it has also been said the purpose of this extension is to ensure that all taxpayers eligible for the rebate under section 87 capital A are afforded the opportunity to exercise their statutory rights without facing procedural impediments. Now, pausing here, while I am making this presentation, just about 6 days after this court judgment came to be delivered, today being 26th of December, until the evening on this working day, unfortunately, the CBDT has yet not come out with any order or notification under section 119. In fact, a question that arises, and this is perhaps the first thing that I think the petitioners would like to put before the Honorable Court, because the court has said that the next hearing of this petition after granting this interim relief, in the conclusion they said, post this matter for 9th of January at 2:30 p.m. for final hearing. So the question is, today if some taxpayer who is eligible to tax rebate and who wishes to, as per the interim relief granted by the High Court, he wants to file either his original return or revise his return because he was not allowed to, by the system, make this claim. And he wishes to now, under the revised return, claim the benefit of 87 capital A, which the court has said that he can or he should be allowed to do so. The question is, the ITR software utility, even after almost 6 days after the judgment of the court, has yet not been revised, or the gateway is not yet opened for the taxpayer to claim the benefit of tax rebate. he would not be in a position to file a revised return or an original return making this claim as directed by the court. Forget 31st December, even until January 15, unless and until the gateway for this interim relief to be practically implementable is materially granted. Firstly, by a notification, because without a notification there cannot be extension under section 139 for filing the return. And presuming that even up to 31st December, which I can file a tax return and the normal provision, I want to do so, but unless and until the utility allows me to do so. So the irony may be that an interim relief is granted, but it may just remain academic, because if a taxpayer is not permitted to make his claim, if there is no notification for extension, how would the court's interim relief, how could this be possibly enjoyed in any manner, or how would it effectively reach the small common taxpayer for which the court has definitely shown sympathy, saying that their interests need to be taken care of? And as I mentioned earlier, I think what has been said in this judgment is very clear and important, that a procedural interpretation of the board or of the income tax authorities cannot go to override the statutory provisions when they are otherwise clear, and do not permit such tampering, on account of the procedural or technical handicaps. So we are here. The debate on tax rebate will still continue, as all eyes will be on what the Bombay High Court decides on the 9th of January. As taxpayers are eagerly awaiting with bated breath when the notification in section 119, which was directed to be forthwith issued by the CBDT, when will it be issued? How and when will taxpayers be in a position to avail effectively the relief granted to them to be able to claim the benefit of 80/70? And this is all just for this one class of taxpayers. What about all those taxpayers who filed their returns bona fidely prior to 5th of July, making the claim, when the returns were accepted also, nothing was otherwise stated or mentioned except when they got a shock of their life, when under the intimations their claim came to be rejected and demands were raised. Some taxpayers, out of hopelessness, they just paid up without doing anything. Other taxpayers filed appeals, some of them rectifications. How will these taxpayers be in a position to enjoy relief? I would also urge the petitioners, the Bombay Chamber of Tax Consultants, to take up, the plea on behalf of this class of taxpayers who have already been impacted on account of their rejection of the claims, on account of demands being raised in their cases, on account of their being required to go for either appeals or give up. How will they be granted equity, fairness and justice? These are all very important posers. While we hail and laud this great decision, landmark decision, historic decision of the Hon'ble Bombay High Court, which I am sure will at least give faith and confidence to taxpayers that in similar such situations where the procedural impediments try to obstruct or contradict the provisions of law, at least, as the court said, judicial intervention is a must. And of course, in this ever green battle that has been taking place, when there are executive interpretations which are not in consonance with law, taxpayers are required to knock the doors of the court seeking their intervention, PILs are filed, and finally the executive is directed to do something that is in the interest of law. Fortunately, times have gone where by retrospective amendments, things were sought to be sorted out. Even if the statutory interpretation of the provisions as sought to be administered is something different, it should be done by the proper rule of law and not in such an arbitrary and haphazard manner. Well, friends, taxpayers, dear tax professionals, here is something that has come to taxpayers as I would say an important Christmas gift, because their hope and faith in the judicial system, in the equity, fairness and justice will certainly continue, and let us all hope for the very best until the 9th of January, and also keep fingers crossed that before that the directions of the court in regard to interim relief are fairly, justly and in a timely manner followed by the CBDT. Thank you.